from the looks of it, I think you explained several reasons why the U.S. economy and also their financial system, their banking system, is in a different boat, in a worse position compared to the Philippines, right? Is that a fair statement?
Yes, definitely.
All right. Now, I remember again last January, one of the reasons why we're positive about the Philippine market is because of the attractive fundamentals, the strong earnings, coupled with the underinvestment of the foreigners, right? Are these things still true today, despite the markets, correcting significantly?
Yeah, definitely. I mean, okay, so if we were cheap at a much higher level, of course, we're much cheaper now. We didn't really see a lot of earnings revisions on the downside because corporate earnings were quite strong. We're now at the 6,500 level, and at the 6.5 level, we're actually trading at around 12 times PE. So that's more than 2 standard deviations below the mean, meaning I think there's like a more than 90% chance that it can go up if we were to look at the record of the market the past 10 years. So that's true. And then as far as foreign buying and selling is concerned, after a brief period of net foreign buying in January, net foreign selling materialized again in February, March, and April.
Yeah. And just to be clear, you're not expecting a recession for the Philippines and no earnings contraction as well. Is that correct?
Yes, that is correct.
All right. Okay. So given everything that we talked about so far, what is your investment advice for our clients?
Okay, so I think last January I talked about what I felt was an ideal mix, assuming, okay, there's what you call a 60-40 portfolio that they talk about. If you were following that type of a portfolio, I think having a little cash on hand would be good, a little bit of dry powder. But that said, okay, but what if, the U.S. goes down? Like as they say, if the U.S. sneezes, everybody catches a cold. Yeah, that's true. But, if I'm looking at the valuations of Philippine stocks, they're just too cheap because, everybody's just been too bearish. So what if we don't really go down anymore? So I think, it's a good time to buy or to keep invested in stocks. But I also like bonds because, okay, if the U.S. falls into a recession, and of course, if the U.S. falls into a recession, inflation will no longer be a problem. And in the Philippines, we're already seeing inflation, going down. So if you own bonds, actually, you benefit when inflation goes down, when the economy weakens and interest rates go down, then bond prices go up, and of course, yields go down. So if you're a bondholder, you are able to lock on to higher yields, higher income, so that's good. Okay, so what kind of stocks do we want to buy? That said, yeah, there could be some downside, but if you're going to buy stocks, better to stick to those that are already cheap, so your downside risk is less, and then stick to larger cap issues because those will be the first one to go up when the market turns, and then maybe focus more on defensive sectors because they're less vulnerable to risks that may materialize because of what's happening overseas, and stick with those that give some cash dividends, so it's easier to be a long-term investor.
I see. So a lot of different advices there, So can I just clarify, when you said to keep some dry powder, do you have like a particular percentage in mind? Like how much is enough, I guess? I know this can't satisfy all of our clients, right? I mean, it's on a case-to-case basis, but like as a rule of thumb, as a like starting point, how much cash should we have?
Yeah, maybe if you have a portfolio, maybe 20% would be good.
Yeah. Okay.
Yeah.
Okay.
Just in case the market goes down sharply. Remember March 2020 when the market fell sharply. If you don't have cash, then you would not be able to take advantage of that very rare opportunity where, the market was just sold down so sharply,
Okay. So could you share some of your stock picks?
Okay, so actually I have more or less the same stock picks as before. They can read it in my Calling the Shots report. But, we have a new stock pick. One of our new stock picks is AREIT. The reason why we like it is they have a new acquisition that will come online maybe 2024, but that will add around 22 billion pesos in terms of assets, and their dividend yield would also go up because of that. And right now, because AREIT went down to around 32 pesos, the dividend yield is very attractive at 6.6%. And of course, we like the sponsor of AREIT, Ayala Land. They have a lot of assets that they can still inject into AREIT. And AREIT is less exposed to the office sector that is currently suffering from, a lot of issues. But that said, I mean, okay, what if I only have money to buy a few stocks? Because that's what they always ask me. So if we were to pick only 5 stocks, I would suggest AREIT, Aboitiz Power, SM, Jollibee, and DNL. Because, of course, they fit the criteria that we talked about. They're attractively valued. They're large caps or mid to large caps. They give cash dividends, and they're pretty defensive because we're focused on power and consumers, and of course, a dividend play, which is like a proxy to the bonds, which is a REIT.
All right, there you have it. Thank you so much, April, for your time. We hope that we were able to give you some insights to help you in your investing in the coming months. Remember to keep some dry powder just in case something happens, something worsens in the US. And at the same time, don't be too bearish because of the attractive fundamentals and valuations of Philippine companies. For more guidance, you could check out April's piece, which we publish every month in our website. Thank you for watching.